And the truth is about crypto, it's not yet an institutional product. Had the announcement last week that BlackRock put money into Circle, which is USDC, and then Fidelity this morning or late last night announcing that they would allow in their 401k retirement programs up to 20% in Bitcoin and other certain coins. And so clearly the movement is towards putting policy in place on crypto. That's positive. Now the negative is Bitcoin 2022, a couple of weeks ago in Miami, they had to open a special day just for institutions on Wednesday. 1,500 institutions showed up. None of them own any cryptocurrencies. They're trying to figure it out. They know it's coming. They know policy's coming.
Canadian entrepreneur and Shark Tank celebrity Kevin O'Leary has always been vocal about his support for the cryptocurrency space. In a recent interview, O'Leary discusses the current phase of institutional crypto adoption and how far we are from mainstream adoption. According to O'Leary, the institutions currently in the crypto space are only a tiny fragment of those interested in investing in this space. However, one important thing is stopping these big money investors from coming aboard. O'Leary says it is regulation. He also adds that things are gradually changing with leading financial services companies like Fidelity and BlackRock announcing various crypto-related projects. We will now take you to O'Leary's interview, but before we do, please take a little time to hit the like button and subscribe to the channel. O'Leary shares some important updates in this video, and we would love your thoughts about his outlook on the crypto market and inflation. So please drop your comments below and enjoy the video. Let's dive right in.
And the truth is about crypto, it's not yet an institutional product. There's a lot of good signs. Let's start with the signs of the different bills going through the bipartisan committees in the US on the Hill. You got the Haggerty bill on stablecoins. You got the Toomey bill on stablecoins. You have the Loomis bill, which contemplates all crypto. All of these things are moving forward. You had the announcement last week that BlackRock put money into Circle, which is USDC, and then Fidelity this morning or late last night announcing that they would allow in their 401k retirement programs up to 20% in Bitcoin and other certain coins. And so clearly the movement is towards putting policy in place on crypto. That's positive. Now the negative is Bitcoin 2022, a couple of weeks ago in Miami, they had to open a special day just for institutions on Wednesday. 1,500 institutions showed up. None of them own any cryptocurrencies. They're trying to figure it out. They know it's coming. They know policy's coming. Tomorrow, the FTX conference in Nassau, it is sold out globally. Governments from every state and country showing up there. I've never seen so much interest in an asset class that nobody owns. The truth is the whole sector is, Bitcoin's under $1 trillion, which is a nothing burger in financial services. So there's a lot of upside to come. And I think cryptocurrencies, you have to make one decision. Do you go long before the policy and regulation hits, or do you wait until the institutions can buy and pay significantly higher prices with more certainty? And I think that's the debate everybody has to have. I've made my decision. I have gone into 20% holdings across a wide range of crypto and crypto infrastructure like WonderFi, Immutable Holdings, FTX, and so on. Those are the equities I own, plus 32 other coin positions.
Kevin O'Leary has made his decision about the crypto space. He is going long before the policy hits, so he doesn't have to pay significantly higher prices after the big institutions get in. What's your decision, buying now or waiting till later? Please let us know in the comments section. Back to O'Leary's interview. The Canadian businessman and entrepreneur also talks about inflation. He explains that a significant portion of the United States' 8.5% inflation is transitory, and the situation might not be as bad as we've all feared. Please listen to O'Leary's explanation and how investors can still profit given the current economic situation.
The real issue and why the market's fibrillating and trading in a range is nobody knows what percentage of inflation, let's call it 6.5%, is actually transitory and how much is baked in. So the assumption now, there's a lot more data on supply chain, and I'll give you some interesting data points. Shipping rates, in other words, if you want to book a container from the LA port to Chicago, those have dropped 35% in the last 6 weeks. So there's a supply now of trucks and drivers. That's a good thing. On the other hand, getting the actual product into the LA port has not improved at all. So there's lots of evidence here that some portion of it is transitory. That's why you really haven't seen rates back up too much yet, because the Fed is probably, although they're jawboning another 50 basis points, I wouldn't be surprised if they did only 25 basis points for the next hike and then just waited to see what would happen, because It's hard to call recession right now when you have full employment. We've got full employment. Try and hire somebody right now in any sector. There's just nobody to hire. And so generally speaking, if you're going into recession, you get a dramatic slowdown. And the first place you see it is in wages and employment percentages. And right now we're below 4% unemployment. So I don't see a major correction. I just see a lot of volatility ahead. Yeah, it's amazing. And a lot of these down 50, 60, 70, 80% stocks have not stopped growing. Their growth rates remain the same. It's just what people are willing to pay for them has changed dramatically. And I want to point something out. Prior to the pandemic in the tech sector, there was always a lot of volatility. And the granddaddy stock that teaches the lesson of volatility, I ask everybody to go back 15, 17 years, is look at how much Amazon corrected every year. Down 30, 40, 50, 60% annually. And then came back up. And we got used to that. And then all of a sudden, the PPP programs and the $4.5 trillion in the printing press happened and flushing the system with liquidity during the pandemic. That stabilized all the FANGs. It was the go-to name with all the free money. I don't care whether you had Microsoft or Google or Amazon or Netflix. It was money coming out of the sky for free. And that's where people put it, in these big growth tech names. Now we're back to pre-pandemic volatility. Doesn't mean they're bad stocks. A lot of stuff is going on sale. And I think if you look at this 12 months from now, you're going to say to myself, why didn't I buy some Facebook at under 200 bucks? Why didn't I buy some Netflix after it corrected 50% plus? What about the sale going on and lots of other tech names? And so for me, it's again, I've seen this movie before. I'm a buyer here, and you can't pick the bottom. You can't. It's just impossible. You can look at the charts, doesn't help you that much. You got to average your way in on the big sell-off days, on Fridays at 900 points down, et cetera. We're back to the old times of volatility. No big deal. We really haven't had a real correction yet. You want a real correction? Try 20, 25%. That has not happened yet.
Before we end the video, let's quickly examine this news report that 80% of institutional investors believe cryptocurrencies will overtake traditional investment vehicles. This means that 8 in 10 CEOs and other institutional investment policymakers believe that cryptocurrencies will perform better than stocks, bonds, and other traditional asset classes. That's pretty massive. The report is based on a recent survey by crypto trading platform Bitstamp. According to the news report, 28,563 respondents from 20 countries across North America, Latin America, Europe, Africa, Middle East, and the Asia-Pacific participated in the survey. Over 5,000 of the respondents were senior executives of pension managers, hedge funds, and other institutions. The others were retail investors. The result shows that 88% of these senior executives and 75% of the retail investors see crypto becoming mainstream within the decade. 80% of the institutional investors and 54% of the retail investors also stipulated that crypto will overtake traditional investment vehicles within the next 10 years. According to the survey results, the respondents also felt confident about investing in crypto. 67% of the retail respondents and 70% of the institutional respondents said crypto is a trustworthy investment. Surveys like this give us an idea about what the cryptocurrency space will look like within the next 8 to 10 years. We are going to see a lot of institutions rushing into the space so they don't miss out on the splendid opportunities. We already have multinational financial services firms like BlackRock and Fidelity taking the lead, and we believe many more will come. What do you think about Kevin O'Leary's interview and Bitstamp's survey? Please drop your thoughts and observations in the comments section below. Thanks for watching.